Hello and welcome everyone to this Placer AI webinar. We're going to get started in just another minute, so bear with us while we give people some time to join. I think we've waited the minimum threshold of time that we need to. So let's get rolling. Again, welcome everyone to this Placer AI webinar on retail media networks. This is a topic that we've been dying to go into for quite a while, and we waited because we wanted to do it with the person who kind of got this idea started for us. And with that, let me welcome my guests. So first, we are thrilled to be joined by Andrew Lipsman, Principal Analyst at Insider Intelligence. Andrew, thank you so much for being here.
Ethan, RJ, great to be here. Thanks for having me.
And my wonderful colleague, and the first webinar guest ever, RJ Hottovy, Head of Analytical Research at Placer AI. RJ, thank you for being here.
Thanks, Ethan.
Yeah, and I like the fact that we went matching on this one. This didn't even require any, and
Yeah.
no planning, but we had that same headspace, which is great. So a quick look at what we're going to do, and it's a little different than how we normally do it. We're going to do a very, very short introduction for those of you who are new to Placer. We're then going to dive into the retail media network topic itself. And at the end, with the time remaining, we are going to look at a little bit of like kind of where retail stands, what's going on in the wider space. And as always, we will save time to take your questions, but don't feel like you need to wait for the end. If you have a question at any point throughout the webinar, please hit that Q&A button either at the top or bottom of your screen. Send us over those questions and we will do our best to get to them throughout the course of the conversation. This will be recorded. It will be available at the same link that you used to register. And if you just put in your information, it will be available as a YouTube link, hopefully by tomorrow morning, start of day Eastern Standard Time. With that, let's do a really quick intro to Placer for those of you who are new. Placer is a location data company. What that means in its simplest form, people vote with their feet. We show you how they vote across the United States every single day. How do we do that? We observe a panel of over 30 million devices. Very critically, this is all anonymized aggregate data, so we are GDPR and CCPA compliant. We then use that panel of data to run machine learning and AI algorithms to make estimations on visits to retail locations across the country. We then present that data in a wealth of different reports on our platform on everything from cross-shopping, true trade areas, visits counts, and for this conversation, very importantly, unique visitors as well. We then, for those of you who are interested, you can sign up for our free platform. So it's a free version of our premium product at placer.ai. You can also check out our free tools in a section on our website called The Square at placer.ai-square. And with that, it's time to dive in. So, I mean, let's start with the most basic of questions. And I'm specifically going to make this more complicated because I want to talk about the online and offline versions of this. And Andrew, I'll start with you. What is the retail media network? What does it mean for online retailers? And what does it mean for physical stores?
Yeah, so I'll backtrack a little bit. So when I joined Insider Intelligence in 2018, we had a data point that showed that Amazon had all of a sudden become the third biggest digital advertising platform after Facebook and Google. And I was like, that's interesting. Something is going on here. Wasn't really on people's radar. And each year, their ad business continued to grow and grow and grow. And all of a sudden, Amazon started to see more and more profit, right? Everyone likes to say Amazon doesn't get any profit. Their ad business is starting to drive huge profits for them. So that's the first point I would make about retail media. That advertising business is a retail media network. Retailers have become media companies or advertisers. And it comes at much higher margins. So it's a much more profitable revenue stream, and it can completely change the financial picture of retail companies. So that's the starting point. And as this whole idea of retail media and retail media networks has grown, we've seen every retailer kind of get into the game, but it's been all e-commerce driven for the most part, right? It's like you search for something on Amazon, you see some sponsored product ads, you click on those ads, just like the Google model, you make money from that. At a very high margin. So that's what the market is mostly consisting of today. But there's all these other opportunities for retail media to expand. And the opportunity that I'm increasingly looking at and interested in, and why I came to you asking, can you measure this, is in-store. We think about online traffic, and here we're looking at online traffic, the number of people who are visiting these e-commerce websites for Target and Walmart. And these are big numbers, right? Over 100 million or just under 100 million every month, lots of people. But what's that traffic, what's that audience look like in stores? And as you can see here, and by the way, I've seen more data, as have you, it's not just these two retailers as the good examples. It's across the board with all the brick and mortar retailers. They have much bigger audiences in store than online.
Yeah, absolutely. I mean, RJ, same question to you. What does this retail media network mean for online, and what does it mean for physical stores?
Yeah, I'm going to piggyback a lot on what Andrew said here, just because it's been fascinating to watch the evolution of Amazon's advertising business into this behemoth that rarely gets talked about. And he's exactly right. It's all about the profitability of this business. I mean, I've seen estimates that, Amazon's market cap right now is about 1.2 trillion, anywhere between 2 and 300 billion of that comes from the advertising business. And, having covered Amazon for a very long time before coming over to Placer, it was fascinating to watch, because really it started as a way for some of the smaller brands to get traction. They weren't getting placement, they weren't getting shelf space at grocery stores, but they could pay on Amazon and get promoted ads. So when you do an Amazon search, you see those ads come up at the top. That's Amazon's advertising business, and that's where they got their start. And then eventually, as they started being the first page of Amazon search, then you saw the big brands start to counter and want, hey, I want to be on that first page of search too. Then Amazon realized they could do sidebar ads, they could do stores on their platform, they could do the tape on Amazon packages that you could advertise through that. So it just became this very multifaceted way that CPG brands and other brands could advertise on it. So it's fascinating to see. In a lot of ways, I think all of a sudden, grocery stores and mass merchants and other categories, like, hey, could be very lucrative for us too. We've got this great physical store asset. The store as a service is a trend we've talked about in the past. I think this very much falls into that. There's other ways to monetize your store asset in the future. And I'm excited to see where this goes here. And to Andrew's point, look at the reach here. With these physical retailers getting a better reach through their stores, the sky's the limit with the advertising and the retail network here.
On the point of reach, really quickly, in retail world, we talk about traffic, right? And there's traffic on websites, there's traffic. But when you have advertising at scale, and particularly brand advertising, there's a different lexicon, there's a different language that you use to articulate that. Now you start to get into TV world, and it's unique reach. How many people, how many eyeballs can I reach? So all this is doing, in a sense, is translating that traffic number, which is kind of a raw number of visits that are happening, into a unique audience number, which is the language that brand advertisers need to speak in order to understand new media channels. And that's what this is. Stores are the next new media channel.
It's a great point. And by the way, that is what you're seeing here in this graph. You're seeing unique visitors. You're not seeing overall visits. This is the actual kind of the estimation of the actual number of people that are going to these locations overall. And I think that's the power of these numbers, is starting to think differently about what's going on in a store and how you kind of explain what's happening inside of it. This is part of the evolution of retail that we've been discussing. I was Andrew, I don't know how much we're going to reveal about our relative backgrounds, but both of us come from the digital intelligence world. And so I think the interesting thing was, for me, coming to offline was, the limitations of online ads. How low the conversion rates are online. That a lot of people who are coming are looking for store locations, or there's a myriad of other things that are happening. So I think I don't think it's surprising that that those of us who come from the online world, who are coming into the world of kind of, or looking at retail or brick and mortar, are saying, do you realize how big of an opportunity you have in this space that we've come to take for granted in the digital world?
These are some of the most valuable impressions that exist, both branding and performance. And so, right, why is an Amazon search ad so valuable? Somebody's searching for something that they're there presumably to buy, or at least to research, right? So it converts really well. Same thing in the store. You can put your brand in front of somebody, Kraft macaroni and cheese in a Walmart, and somebody's like, oh yeah, we could use some Kraft macaroni and cheese. But you know what? Even if they don't buy it on that visit, that brand impression, it's reaching them at a contextually relevant moment when they're in the right mindset. So that can drive that purchase over time, even if it's not in that given trip.
It's such an important point. And we're kind of already touching on, like, as we kind of, in a very positive way. I think this is something all of us are really excited about. I mean, RJ, I'll start with you on this one. I mean, Albertsons, one of the companies that's really been leading the way in brick and mortar retail on this, and doing a brilliant job of it. But to ask like a more general question, and Andrew, I'm going to ask you the same thing after, but RJ, starting with you. I mean, why is this a big deal? Like, we're talking about what it is. Why is this a big deal for brick and mortar retail?
I think just the biggest opportunity is the ability to drive some profitable growth. This is something that, inherently grocery is a low margin business, 1-2% net margins in most cases, certainly low single digit for most retailers out there. And so layering on a potential, highly profitable revenue source on top of it is a big thing. But I think this chart reveals kind of a secondary motivation too, is that sometimes it's hard to reach customers, particularly online. Some of the more rural and kind of less densely populated states and markets, sometimes the digital advertising, the economics don't necessarily work the same as they do in New York or Los Angeles or Chicago. And so I think that this gives you an opportunity to really reach some of those customers that maybe you haven't been able to target before. This is important too, because, if you've been on some of our past webinars, we've talked about migration trends. And, there's been a big shift in terms of where people are living coming out of the pandemic. We saw a lot of people move away from urban centers into more suburban and rural settings. And as you start to look at that, I mean, this is a great way to target those people. Maybe they're not going to have the same reach that you do with online ads. And I think this could be a really interesting way to go after this audience and really get in front of them. So it could be, to Andrew's point, I mean, stores becoming the next channel, the next media outlet. I mean, I think this is spot on. And I think this kind of shows you the power with some of the reach you can get for these smaller market customers.
Yeah, I mean, these are great reach numbers by market. I think the local angle is so interesting because a lot of these players, and let's talk about grocery specifically, right? There's a lot of national players, but there's a lot more regional and local players. And they can speak to those audiences specifically. So there's, and listen, there's a lot of ad dollars that go into local TV, and TV, it's harder and harder to reach these audiences. We always hear about millennials, Gen Z, like they don't even watch linear TV. So you can't reach them with your brand message through those environments anymore. Guess where you can reach them all? In store.
It's a really good point. And it kind of leads interestingly into like the next topic, which is one that I know it's almost like the next layer of something that's barely just gotten off the ground, but still gets me excited. And it's this idea of like different ways to segment audiences. I mean, we've talked to companies who've said, if I can hit a Dollar General in a city that has less than 100,000 people, and I can segment that audience across the country, that's a unique market that I can speak to in a very specific way. I mean, your idea of the regional breakdowns for grocers, or even, you think to steal from the online concept of micro influencers. How do I target very specific markets and very specific areas? I think the second you look at the store as an advertising channel, there's a whole new range of ways to kind of cluster those stores together to reach very specific audiences in a targeted manner. And I think it's kind of changing the way we view segmentation. I mean, Andrew, I'll start with you. Are retailers and CPG companies ready to take advantage of this? What do they need to be doing to prepare themselves for this shift?
That's a good question. So I think first, I mean, there's an education process, realizing the opportunity for the right experiences and beginning to shift their thinking from some of these channels like TV, or maybe there are dollars that right now are trying to flow out of Facebook as they lose some of that targeting and attribution measurement. So one, I think they just need to realize and consider the opportunity, think about how it aligns with their specific marketing strategies, and then understand the audiences or the geos or whatever it is they're trying to reach for their brand, and figure out how stores can help fill that gap for them.
It's a great point. RJ, from your perspective, how do retailers need to approach this opportunity, considering the ways that now exist for them to think differently about how they segment their offense, their audiences? When even like when we discuss this, things like cross shopping, psychographics, like all of these other elements that allow you to say, well, this is a way to kind of cut up our stores as a mechanism to reach specific groups.
Yeah, it's interesting too because most of the conversations we've had with retailers, the last couple of years, I mean, I don't think they are ready for this particular opportunity at this point. I mean, we have a couple of the big players, particularly grocery, that have started to get into it, but just it's only really starting to scratch the surface, and the ability to really get down to this granular level in terms of how to better position your store. I think the cross shopping thing you mentioned is going to be so important. Understanding where else these customers are going to. We've got examples in the white paper that we put out about, if CVS happens to get a lot of cross shopping from fitness and health brands, those should be the ones focused on that too. And there's different ways to leverage the store on that too. And it's not just just putting a banner ad. I mean, there's so many different ways to really strike and get that impression in that store too. So I think that cross shopping opportunity is really going to be enlightening for a lot of brands, understanding, hey, we know we're getting this kind of traction at the store, but what other things are these customers interested in? Where else do they go? And I think that's going to be really important to tailoring these solutions, because at the end of the day, I mean, it's going to get crowded. I think the one of the messages here is there's going to be a lot of players trying to convert their stores into retail networks and capitalize on this, but it really comes down to being able to deliver return off that and seeing that CPG brand sees increased sales, increased awareness. And so I think that those brands that are best positioned, who are coming into their locations and where else they go, are going to be an advantage when they're trying to put together a retail network, future plans.
I want to make a point here. I love this example of CVS and cross visiting from gyms. So if you're a retailer, the one thing you don't necessarily want to happen is just to have those shopper and trade dollars move into retail media opportunities, because it's not net new revenue. It's just shifting of budgets. They really want to bring in net new advertiser revenue. And so if you can find those adjacencies, those other advertisers, in many cases, it would be other local advertisers, to be able to promote a local gym in the area while you're at CVS, like that. That is revenue that is like the best possible incremental revenue for these retailers. So wherever they can get those, what they call non-endemic advertiser opportunities, that's a big business opportunity for them that's totally untapped today.
I couldn't agree with you both more. I think there's such an exciting way to think differently. I do think what's fascinating is, for anyone who's operated a little bit in the world of kind of online user acquisition, how quickly things got crowded, but there's also this unique element here of you have lessons that have already been learned. So there's basic kinds of intent. Hey, someone goes into a grocery store, they probably want food, right? But then there's these kind of other levels of like kind of hyper targeting that I think it'll be really interesting to see how many steps we skip, or how much faster this moves to get to more nuanced kind of approaches to targeting and audience finding, because of this. A very similar experience has already exists. All right, so now we're going to go into 3 different groups, and we touched on this a little bit, but we're going to focus here. So the first, we're going to look at retail, then we're going to look at CPG, then we're going to look at real estate. And so, I mean, RJ, I want to start with you. What will this shift mean long-term for retailers? What do they need to do today to prepare?
Yeah, it's a good question. And I think what it means is that, we're already seeing an evolution in terms of how retailers design and build their stores. And I think that this is only going to continue and probably accelerate that trend. This is pretty powerful numbers here. I mean, we can show that Walmart has roughly 2/3 of the country in the US coming in as unique visitors. That's a pretty powerful story right there, and that I think a lot of CPG brands are going to want to participate with. But I think ultimately from there is, how can you best position your store to, with the different ways to get in front of people and, the different eyeballs. So I think that the way retailers go about their store design, I think, is going to be a big part of that. And that's what's going to be a big change, giving, ways to show off more brands and more ways to do it without overpowering either. I think that's an important thing too. It has to be something of more of a subtle way to get in front of people. But I think that's going to be a big part of the design element. I mean, we're starting to see it already with a lot of these, the retailers have been using retail networks, but I think that's going to be kind of the key thing, is it's going to really change the look and feel of how a store and how we interact with it.
There's a lot of potential surfaces. I think you're acknowledging, like there could be a customer experience tension. You don't want to barrage people with ads. You don't want them to turn away from purchasing. But there's a lot of real estate in these big stores, grocery stores, big box stores. So there are ways to do it right. You have TV walls, as an example, you can see the opportunity to have digital end caps signage there. Seems pretty natural. At the checkout aisle, you're seeing it on cooler surfaces, cooler doors. So I think it's about experimenting and finding out what the right combination is and doing it in a way that respects the customer, but you can create really great branding experiences. One thing that jumps out to me, I want to highlight on this chart in particular, look at Dollar General as an example. Like there are some major retailers, huge retailers, you know, one of the biggest and opening the most stores in the country. They just don't get a lot of online traffic. So if you're only looking at e-commerce, your retail media network is pretty limited in opportunity. Now, if you look at they're getting over 50 million people a month in their stores, totally different opportunity for them.
I mean, it's a fantastic point. I mean, and on that, Andrew, are there retailers that you look at that you think are like, these guys are on the right path, they're doing it right, they're the model to follow?
I think the smart retailers are thinking about this more and more. I would say, I think some of the opportunities right now that many have focused on, gas station TV and checkout terminals, to me, undersells the opportunity. They need to start thinking about bigger surfaces. Look at Amazon Fresh. They're opening stores where I would say retail media is built into the experience. They've got some big screens kind of over the center aisle. To me, that's like a minimum. Like most stores should probably be doing something like that. Best Buy, Walmart have TV walls. So those are good versions of it. I don't think anybody has really like figured out the, you know, magic equation for how to do it and maximize the opportunity in a way that is win-win-win for the brand, the retailer, and the customer. But that's what's fun about this, is we're in those early days, and it'll get figured out over the next couple of years.
It's a great point. So a question came in. How open are you finding that retailers are to share this type of data with CPGs or other potential customers? I mean, I think this, look, we're a data company, so we're super biased, but the starting point is you don't need them to be anymore. Like you have this information and welcome to Placer. but no,
Yeah.
I mean, I say that kind of like, you know, obviously, you know, being also joking a little bit, but I think one, they're going to have to figure out how they package this. And if you look at places that are already doing it, you see this material being created of understanding their audience, explaining to you what they do and how they can bring it. Like they want this to work, so they're going to have to show you some information. But if you really want to be empowered and you want to drive that conversation, it's about data access. Can you dictate the terms and say what you want, especially in the early days? And the company that I worked for in the past, it kind of drove its original growth on straight SEO, but their mastery of kind of search engine optimization in the early days of that model allowed them to move past other competitors and just accomplish a lot. And this is one of those stages where you're in the early days. So if you are empowered with data, you can kind of dictate terms a little bit more and grab those early victories in this kind of growing medium.
One of the big conversations about retail media at Grocery Shop this week was just about like, are we just, you know, seeing the evolution of a bunch of new walled gardens, and everyone's a little bit uncomfortable with them owning that data. And you will probably need to rely on some of their data, but like there is a huge role to play for third-party measurement. People want third-party measurement of audiences, traffic, sales data. And if you're a brand, you want to understand that across retailers, right? You don't want to just work with each retailer individually. You want to see that holistically. Maybe you want to see it by market. You want those different data cuts. So there's a huge role in this massive opportunity for third-party measurement to play.
It's such a good point of like this cut up of not just thinking by retailer, thinking by region, who has certain audiences in what way, and kind of creating these ideal maps for you to reach your core audience. I want to now take the flip side of this, and Andrew, I'll start with you here. What does this shift mean for CPG companies? How do they need to prepare?
I think they need to start experimenting with the right formats within their stores, figure out what their assets are so that it can be monetized. There will be operational challenges. There are lots of things that you may not have thought about their implications for IT teams, brand safety. How do you traffic these ads in store? How do you ensure that somebody doesn't hack the system and allow something that shouldn't be shown in a store to be shown in the store? So there's all sorts of things like that there needs to be an apparatus around. I think a lot of these things are already being solved in different ways, but I would say retailers need to, one, go in eyes wide open and understand that there will be some of those things to work through and some operational challenges. And then two, really start to think about how do they maximize the opportunity? How do they talk to brands, figure out what brands want in terms of that advertising experience, and just work with their constituents. But I like these opportunities the most when, to me, all the key constituents should win. Like the pie will grow here. So you just need to figure out how you, manage the different slices of it so that that value gets distributed in a way that everybody's happy.
Yeah, fantastic point. RJ, for you, how big is the opportunity, the channel for CPG? And then do you think there are wider implications to these companies? Obviously, they know about the brick and mortar environment, but learning the brick and mortar environment with a greater degree of nuance.
Yeah, I would agree. And what's fascinating, one, to answer the first question, I mean, it's obviously a huge opportunity. I mean, we wouldn't be having a discussion with it if it wasn't. But I think what's interesting to me too is that, it's almost a repeat of what happened in online. I mean, or almost a reversal of what happened online. Right now, a lot of the brands, the CPG brands that are utilizing retail networks are the large brands. That's the group that's kind of figured it out first. And, I think there's a big opportunity with smaller brands. I mean, these upstart brands that spent most of their time on digital advertising right now. And obviously that's gotten so much more prohibitively expensive. I mean, that's frankly why we're seeing a lot of these, digitally native brands start to open up their own stores. And I think this almost is kind of an adjacent, kind of an auxiliary to that, is the idea that you can leverage other people's stores. You don't necessarily need to have your own store. You can build ways to have impressions with that too, particularly these smaller brands. And so I think it's, a lot of ways, could be the leveling of the playing field for a lot of these smaller brands. And we can do the advertising at the same kind of, maybe not the same level. I mean, just a matter of scale for some of these larger brands, but certainly you can really do a targeted way to get in front of the right customers in these cases too. So I think that in a lot of ways, this will help to level the playing field for some of these smaller brands. And I think that's one of the big ripple effects we'll see across CPG.
Great point. I think we're also going to see, like, the store-in-store concept that we're so used to in some elements. I think we're going to see that expand in things like grocery. Like, one of my favorite things that I've ever looked at with our data was how many people visit the M&M store in Orlando, Florida. Like, it's mind blowing when you realize, all right, none of them buy a bag of M&Ms. Obviously, a lot of them do, but like, the impact that location has on all these people who have now, I don't know, they have their blue M&M guy toy, and what that means for their proclivity to buy that product later on, the kids who walk through it. There is this crazy opportunity even in that. I think the crazy thing is once you kind of open your eyes to this as a medium, then the creativity starts happening of like, oh, there's actually, we could do this and we could do this too. I think the floodgates open.
Stores are great branding experiences, top to bottom. You're bringing up experiential retail. I think about going into a Target now. You have all these different shop-in-shop concepts for Disney and even smaller versions of it, just for things like Lego, whatever the case may be. That matters. It really formulates how you feel about a brand, and it works for food brands, it works for toy brands, it works for electronics brands. You see it all over Best Buys now. So yes, let's start thinking about stores as branding experiences.
Ethan, I'm not convinced that you aren't a retail network for M&M at this point. So
I have to tell you, if anyone from here is listening is from M&M's, you should know that I love you so much. Somehow the pretzel, I thought that was the greatest thing, but then you launched brownie M&Ms, and that blew my mind.
Wait,
so
what?
I'm all in.
Brownie M&Ms?
Oh, there's brownie M&Ms, Andrew.
Wow. Okay.
Yeah, this is.
I think you have a budding career as an M&M influencer.
That would be the greatest accomplishment of my career. I want to get in. Two questions came in that kind of touch on a similar topic, and essentially asking, there's offline data, there's online data, there's social media data, there's all of these data sources that need to converge. Is that going to create a challenge? I will start by saying, one, yes, it's complicated, and like we do foot traffic very, very well. Online data is a whole nother animal. Are we doing things to kind of bring it into marketplaces and the like? Of course. But yes, there are lots of different perspectives, and those perspectives it's not always apples and apples. And I think it is going to be I know for us as a data company, one of the big things we're really focused on is how do we bring lots of data sets together so that you can view it through a single perspective. Andrew, RJ, I don't know if you guys have thoughts on this topic.
Yeah, I mean, I'll start with Amazon as an example here. So Amazon really kind of owns the full funnel experience. If you think about it, with now that they're opening up more stores, so they're delivering ads on their site, upper funnel through TV, now through NFL Thursday Night Football, and then into stores. So they really kind of own this full path to purchase. That's the dream, right? Not everyone's Amazon. So how does everyone else do it? It is about ultimately combining data sets to be able to understand that holistic view. Obviously, privacy compliant, anonymized data, but there are ways to join those data sets in compliant ways that can provide that more complete picture. But I think that is how we need to try and understand how all these different advertising stimuli at various phases of the funnel ultimately lead to sales.
RJ, any thoughts on this one?
Yeah, just it's got to be a test and learn approach with like anything like this. You don't want to put all your eggs in one basket. You want to, sample around, try different approaches, tie together different data sets. What are the insights you learn? It's going to take time, and things are going to certainly evolve too. That's the other thing, is this is a fast moving category. A lot of the retailers that we had on the earlier slide really don't even have a retail network at this point. And so, I think we're going to see that evolve. And as other people start to get in the game, you're going to need that data to really keep on top of the best way to get a return on your investment there too. So really kind of adopt this test and learn approach. It's going to continue to evolve. And so be nimble, I guess, is kind of the my thought there.
It's a very, very good point. I want to talk about, this is one of the areas we've been operating with in obviously for a while at Placer, but I do think there are some really significant real estate implications for the landlords, for the way we develop centers, et cetera. RJ, from your perspective, what does this shift mean for real estate? How did they need to think differently? They're not one of the primary two pieces, but they are a big part of this as well.
Yeah, certainly they are. And it's a case where there could be collaborations with their tenants on this one too. I think it's a big idea here, that a lot of times the commercial property owners also have a lot of room for impressions, a lot of ways they could showcase brands too. So it may not just be, something for their tenants. There's ways to do it in a creative way at their locations as well. So I think that's kind of the idea is, again, Andrew's point about this situation being a win-win for both CPG brands and the retailers themselves. I think it's a win-win-win when we add the real estate companies on top of it too. There's ways that you could structure these partnerships and these retail networks where everybody can win. So I think that's kind of the thing to me is going to be most interesting, is it's not just the store and the brands in the store, it's also the property owners too, that there's some opportunity for them to get into this too. We'll see if I don't know if the full retail network makes sense for some of these chains, but if you're a large enough property owner, there might be an opportunity to do it at that level as well.
It's a very good point. I think you think about how much space exists within these shopping centers, and by the way, how it empowers the CPG brand of like, if I can't necessarily guarantee where I'm located within someone else's store, but if I can message you before you get into the store, that's a lot of power to come into my hands as a product company.
Yeah.
Andrew, I think as we have this conversation, it kind of says, all right, well, what has to change in the store? Well, what has to look? Are we seeing kind of a fundamental shift of what the in-store environment is going to look like? And what do you think the key innovations will be that drive this forward?
Yeah, I'm already saying that I think the digitization of the store is like the next mega trend in retail. And it encompasses a lot of things. I put retail media front and center in that, but it's also things like checkout automation, dynamic pricing at the store shelves, other digitized experience, digital payment integration, all this sort of stuff is going to come together. And then also there's increasingly digitization of store analytics. Like we now are starting to see through camera technology and other things, how people are moving throughout the store, how they respond to different stimulus, and then maybe how they purchase as a result of that. Think about the last 20 years in digital has been all about like, oh, we've got all this data on how things work. And now we're going to start optimizing the hell out of it and, be able to do things really efficiently. I don't see why that isn't going to happen in the store. And I think that means a lot more profits can be extracted, better personalization, better experiences for consumers, as long as retailers kind of respect that overall customer experience. We are at the beginning of just an enormous trend in the retail store experience. I think it's going to be amazing.
I think you're dead on. It's also one of the things that I could never wrap my head around, kind of the video-based cashierless checkout concept. I don't think cashiers are such a problem for most people. I think there's other solutions that are much cheaper. But then the second you realize that, hey, imagine what I could learn about what happens in the store, how I could optimize experiences, how I could sell this in-store advertising, because actually 90% of the people spend more time at this end cap than that end cap. You know, this is how people interact with certain types of products. That's the game changer. Amazon is a brilliant company. It's not removing the kind of the not high earning, you know, cashier. It's bringing data into the store. I think that's the
That
massive
was the light
innovation
bulb
here.
for me when they announced store analytics. It was just a few months ago, and I was like,
Yeah.
oh, I see what this is about now.
Yeah.
It's the headline, and they're such a smart. The thing I always get when I look at Amazon is you just have to assume they have a really good reason for doing what they're doing. It doesn't mean everything works. It doesn't mean they get everything right. Nobody does. But they're too smart a company to do things without a good reason. I think that's now how I approach everything of like what's the smart way of why you would get to this? And usually that's why they were going that direction. I want to get to a couple of questions that came in. So someone asked, are you seeing manufacturers advertising products on a retail media network that is not offered at the retailer? How much are retailers starting to act as an independent platform, or is this an extension of their store?
Yeah, so we talked about this is the non-endemic question. It kept coming up over and over. Every retailer wants non-endemic advertisers for the reasons we stated. That's true new revenue. The inhibiting factor is they're buying ads across a bunch of different platforms already. So you have to have something that speaks to their audience much better than whatever the next best alternative is. And what I would say here is like Amazon and Walmart are pretty well positioned because they have such depth, and maybe Target too, such depth of data about household buying patterns that maybe other retailers who just see a one-off purchase here or there, they're not going to have that same sort of data. So I think this has been a little bit tougher sell than retailers would like. But what you both are bringing up that I really like here is I think the local advertising opportunities in store are huge.
Yeah.
All these local advertisers, this is where you want to advertise. You know, to be able to, in a retailer, advertise your local restaurant, right? I mean, these are the majority of the stores that you see in your local area. It's not just the national retailers. So that is a potential opportunity for non-endemics. And then just, you know, thinking about some other things. Here's a couple of other non-endemic opportunities to think about. So in big box retailers, you've got the gift card aisle. Think about the brands who are selling there. Apple, Amazon, Nike, all these other brands that may not even be sold in any meaningful way in that store. Those are potential ad dollars that there's some relevance there. And then, I don't know, other things that just happen in the physical world, whether it's, you know, advertising for Uber or Lyft, those are big companies, or advertising for local entertainment, sporting events. So there are a lot of non-endemic opportunities that I think it's a lot more interesting in the in-store environment, more so than the e-commerce experience.
That's a great point. I mean, I also think that one of the things that, you know, we haven't really discussed is imagine if what happens when you start understanding where you want to advertise as a product company. You can also understand where you want to put your products. Like you start getting a little bit more nuanced. One of the companies we mentioned was Target. Target's one of their brilliant things is the way they merchandise on a per location or per region basis. You bring that approach alongside an ad network, and that's talk about the value of intent and like the type of intent that comes in. If you mix that with kind of that level of local understanding, it's a very, very powerful channel. I mean, another question came in that I think is a really interesting one. Do you see an emergence of some sort of DACO? I know it's like that. I don't want to hope I'm not totally butchering the pronunciation here, to manage or regulate media pricing across asset, or is it a sort of free-for-all where each retailer drives their own model? RJ, what do you think?
Yeah, at this point, I mean, from what I've seen, I'd love to hear Andrew's opinion because he's got a better handle on the stuff than I do. But it really does seem like more of a free for all, where the retailer can kind of dictate the terms. I mean, they're the ones that have the assets that effectively your advertising point too. So it really becomes them dictating the terms. Now at this point, they're probably not charging as much as they could on some of this stuff because it's still very early days, and the returns for some of these things haven't necessarily been borne out. But we're starting to get a pretty good handle from at least what I've seen with Albertsons and others on this. I think that we're starting to get some real clarity about this. But right now, it really is I think the retailers themselves that are setting the terms as opposed to some of the other advertising companies.
Andrew, your
Yeah,
thoughts?
I think it's a great open question. I mean, I'll sort of rephrase so can they traffic ads themselves, the retailers? And they're not really, this isn't a core competency of them, right? So it's new skills you have to build. If you're a big enough retailer, you should probably be doing this in-house. But what about everybody else? Do you need to rely on a digital out-of-home player to do that for you? Or increasingly, I think some of the big programmatic players will start moving into the physical space. So don't be surprised to see that trend if you think about the real big networks of programmatic ad delivery.
Yeah, that's good. It's a great point. One, a question came in that we actually touched on. I mean, RJ, you and I were looking at this a lot just a week ago. What influence has social media into driving customers into stores? Let's use the example that we just looked at. I don't know if everyone's familiar with Mr. Beast. Mr. Beast is a big influencer in the YouTube space. He's got a burger chain. He's got a chocolate bar. He launched the first location of his burger chain in the American Dream Mall in New Jersey on September 4th, so the Sunday of Labor Day weekend. If you look at the visits from the September 1st, 2021 through September 8th, 2022, the day of that launch was visits were 320% higher than the average daily visits to the American Dream Mall. They were the highest they had ever been on any day since the mall opened, and it wasn't even close.
Yeah.
Obviously, that is an outlier, but the short answer is 100% social can drive things offline. And it should be this big glaring, another example is a silly one. The first ICSC we went to, someone showed us data about the South Coast Plaza, and it was a really important mall in California, and we saw visits were down. We didn't understand why. We're like, oh, this is weird. And the woman standing before us is like, oh, that's because it's the year before Kim Kardashian had a pop-up there that they promoted through all of their social networks, and it drove crazy visits over a 4-month period. So the answer is 100% yes. Is it always going to be as high as those? Of course not. But it's a very powerful element when utilized correctly. RJ, Andrew, your thoughts on this?
Yeah, I'll start. I completely agree, and it's funny that looking back at kind of the celebrities and influencers who can drive that kind of volume. I mean, it's amazing that I have to add Mr. Beast to my list. Oprah and Kim Kardashian here, who have been able to swing comparable store sales by a meaningful amount in a given period here. Absolutely, social media can be a nice way to augment it, but I think that's the key point. Is it's adjacent. It's part of the overall mosaic that you're putting together in terms of a marketing program. Just one step of the way, and as we branch out to start, at the physical store, there's gonna be a way to interact and interplay with the social assets as well.
Social media drives discovery and demand. Just to close the loop here on retail media specifically, I'll say, retail media networks online can use that purchase data to target ads on these third-party publishers. So they're doing that. You deliver an ad for a brand or retailer in that environment, hits them at the sort of top of the funnel, but that can actually then drive that traffic into the store, drive purchase there. So I'd say just look at social as a holistic piece, but clearly a big piece of what influences people to make those purchase decisions.
Interesting. One last question, and we kind of knew this was going to happen, that we were going to end up talking about the retail media network thing for the most part. So we didn't even get into the second half of the webinar, but that's fine. I mean, that's we'll talk about that stuff another time. I want to do a version of one last question that was asked. It was basically asking what would you recommend for CPG startups that are looking to create brand awareness? And so, I mean, I guess if you had the one piece of advice for a CPG company that's about to kind of dip their toes into these retail media networks, what would you say to them? Andrew, let's start with you. RJ, we'll go to you after.
Well, so this is where it gets interesting in store. So you have to get on a store shelf as an upstart brand, but that's happening more and more today. I just did a report called the Digital Shelf for CPG Brands, and I actually told the story of Buy, which was an upstart that ended up becoming a $1 billion brand because it knew how to win on the digital shelf. I think those same principles are going to start to apply more and more in store. They need to get shelf space, but if you really want your brand to catch a wave and get wider distribution, you need to put that brand on steroids. And the way to do that, if you're in physical stores, is start buying retail media in stores, right? You're probably going to be venture funded. And I think you need to take that capital and push it into getting momentum and drive that sales velocity in store. And all of a sudden you can start to grow into that mainstream brand. That's how these brands are going to take the leap.
RJ, your thoughts on the same question?
Yeah, I completely agree. And I think to that point, I mean, work with your venture partners on this too. Typically, they're looking at the same, same way to help out a lot of their brands as well. There may be ways to leverage, and they may have access to some of the data that you need to do. They may have access to Placer, they may have access to other data sets that really can help refine and help you better understand, because it really is not going to be one approach suits every brand. It's going to depend on the category. It's going to depend on, the positioning, who you're going after, low income, high income, different ethnicities, different demographics. There really is not a cookie cutter approach here too. So bringing as many people in that have access to these data sets, I think is going to be important. But it really is about getting the brand out there and getting impressions. And I think this is retail advertising networks is a great way to do it. And it's going to be more and more a part of the startups, marketing plans in the future.
Yeah, great point. It can't just be brute force advertising, right? They still have they have limited funds in a lot of cases. So it's about where you do it. Find out through data what are going to be the most hospitable environments and the ones where you're most likely to catch that wave.
Yeah, the greatest misnomer in the world of startups is that the first mover has this huge advantage in terms of like, oh, I bring something new to the market. The maybe the most underestimated advantage is if you can find a marketing channel that's new to you or your space. So marketing channels that are just getting rolling, you have the chance to have an outsized impact that you will not have. Look at any company that grew through PPC 5 to 10 years ago and ask them to do the same thing now. It wouldn't work. It's too expensive. And so this is when something is new, there is an opportunity that doesn't, no guarantee, but this is you strike when these things are open and you're going to have an outsized return that won't be there in the future.
Early arbitrage opportunities. That's the name of the game. That's how we saw the rise of the whole D2C brand trend. And then guess what happens? It gets crowded eventually. The ad rates go up and all that margin that you could play with before, you've lost. So if you want to build a brand, you got to do it early.
It's a very good point. And with that, I want to thank you, Andrew, RJ. Thank you both so much. This was a webinar, what, 6 months in the making, Andrew? But
conversation started a while ago for sure.
Yeah.
But it was this was one of my favorite topics. And thank you so much, everyone, for joining us. Our next webinar is going to be in just a few weeks. We're going to do a holiday prep call with our good friend Simeon Siegel from BMO. So please make sure to join that. And thank you so much for being with us today. Have a wonderful rest of your day, Andrew and RJ. And thank you so much for being here.
Thank you.